So in this video we are finally gonna take a look at the Fibonacci retracement tool. We will take a look at both how to use Fibonacci retracements, but we will also take a look at what the Fibonacci indicator actually tells us about the price. So what does these numbers right here actually tell us, and how can we use Fibonacci in our trading strategy? So if you think that sounds interesting, I really hope you will enjoy this video. Make sure to grab a coffee, a pen and paper if you want to, and without further ado, let's get started right away here. Alright then, so what is Fibonacci retracement and what does the tool actually tell us about the price? Well, let's start this video off here by opening up a chart. Right now as we're speaking, we're looking at Bitcoin and we are on a daily time frame. To open up the Fibonacci retracement in TradingView, we go up here to the upper left corner, press right here, and then we press the Fib retracement tool. I'm going to use the Fibonacci retracement from this point right here up to this point right here. And for now, you can actually ignore why we used this point to this point. I will talk all about that later on in this video when we take a look at how to actually use the tool. But for now, let's actually focus on what the tool actually tells us about the price. So as you can see here, if we look a bit to the left, you can see that we have numbers. It says 0 right here. It says 0.236, 0.382, 0.5, and so on and so on. And you may wonder, what are these numbers? Well, these numbers are basically percentages. So for example, this number right here, where it says 0.236, this basically means 23.6%. And you may wonder, what is 23.6%? Well, if you look at from the low up to here, this is 100%. So this is 100% of the move. And this part right here, from the highest point down to the first line, so down to the red line, this is 23.6% of the whole move. So that is basically what that means. And for the same reason, if we take a look at from the highest line down to the line right here, here it says 0.382. This basically means that this part right here is 38.2% of the whole move, and so on and so on. From this line all the way down to the green line right here, this part, it says 0.5, and that basically means that this part is 50% of the whole move. And by the way guys, 0.5 is actually no real Fibonacci level, but this is still a very important level, and we will also return to that later on in this video. The Fibonacci retracement zone in between the 0.5 level to the 0.618, so you can see this zone right here in between this level and this level, this is what we call the golden zone or golden retracement zone. This one is very important because this is a very common zone for the price to react and reverse. As you can see in this example, we had this impulsive move towards the upside, we had a pullback, which is a move against the direction of the trend, and we can see here that the reversal actually happened here at the golden zone. This is a common level for the price to reverse, and we will talk about that later in the video when we talk about our Fibonacci retracement trading strategy. But alright, so how do we use the Fibonacci retracement correctly? Well, let's once again go up here and open up our Fibonacci retracement. And how we use the tool differs a bit depending on if we are in an uptrend or if we are in a downtrend. If we are in an uptrend, what we need to identify is that we need to identify a swing low and a swing high. In this case, the swing low is down here and the swing high is the very top of the move. A swing in trading is basically the strong move that are in the same direction as the trend, while the retracement, or this move right here, is the move that goes against the direction of the trend. So when you use your Fibonacci tool, you want to first of all identify the overall direction of the trend. So trends basically moves like this. We have a swing followed by a retracement. We have the next swing followed by the next retracement, and so on and so on. So what you want to notice here when you use your Fibonacci tool is that you want to identify the swing low and the swing high, and you use the Fibonacci from that point to that point. So you can see that in this case we have a pretty clear swing low right here, we have the swing high right here. And these Fibonacci numbers are common levels for the price to reverse. Specifically, remember the golden zone. This is a common level for the price to reverse. Let's use this once again. So let's take a look at the next swing in this trade. If you want to, you can pause the video and try to notice the next swing low and next swing high. Well, let's open up our Fibonacci tool and anchor from the low right here. This is our next low right. And then we take our Fibonacci all the way up to the very high of the swing. So right here, we have the next swing, swing low, swing high. And you can see that this part right here is the retracement. And as you can see, guys, once again, where is the price reversing? We are once again seeing the very low happening. Guess where? Let's use our golden zone right here. You can see that once again, the price dipped down here in our golden zone before we saw the next move towards the upside. Let's do this one more time. Let's identify the next swing low to swing high right. In this case, we have this is the low, this is the high, and where is the price reversing? Once again, our golden zone is right here between the 0.618 to 0.5, and once again, this was where the price reversed towards the upside. But now then, what about downtrends? Well, downtrends work in the same way as uptrends. Sometimes they can be a bit more aggressive, but the same principle applies here. But in this case, we have the swing towards the downside, and now the retracement will be when the price goes up. We have the next swing, and the next retracement is when the price goes up, and so on and so on. So in this case, you can see, where do we have the first swing of this downtrend? Well, it's this one right here, right? So we use our Fibonacci tool from the swing high down to the swing low. And as you can see, guys, in this example, the price actually broke the golden zone. So the zone here in between 0.618 to 0.5, the price actually went just a tiny bit higher, right, before we saw the next strong impulse towards the downside. And this is one very important to notice, and this is true for all technical analysis, that, you know, these tools, especially when you use the tools alone, will not work all the time. This is just one tool that can help you in your trading strategy. But when you have a trading strategy, what you always want to do is that you want to combine multiple technical tools and multiple variables, and it's only when you have multiple signals at the same time, or at least usually you want to have multiple signals at the same time before taking your trade. But you can see that even in this case, it was pretty close to this golden zone right here. The price reversed. So now then, how can we use what we just recently learned and apply it in our trading strategy? So once again, let's return to our first example we talked about earlier in the video. We open up our Fibonacci retracement and anchor, remember, swing low to swing high. And we can see here, the first thing we notice here in our trading strategy is that the price reversed here on this golden zone. So that is step number one. But remember, in order to have a trading strategy, we want to combine multiple variables, so we need multiple signals happening at the same time. One such signal is to combine the Fibonacci retracement with support and resistance. So as you can see, in this particular case, we want to take a close look at the golden zone and see if this one acted as support. You can see that the price came down here one time, the price went up, we came down once again, we saw support another time, the price went up a bit, and then we saw support a third time. So we can see that we did see buying pressure coming in multiple times at the golden zone, and this is yet another bullish signal. So now we have both the Fibonacci golden zone, and we also see that the golden zone is acting as support. So now we have two bullish confluences, or two bullish signals at the same time. But in this particular case, we actually have yet another signal. If you take a close look at this green candle together with this red candle right here, this is actually what we call a bullish engulfing pattern, and this is a bullish Japanese candlestick that actually indicates a potential reversal to the upside. So now we have three bullish variables happening at the same time, and we are ready to take our trade. So we open up our long position right here and we enter the trade at the close of the bullish engulfing pattern. And you may of course wonder, where do we set our stop loss? In this case, I would actually set my stop loss below the lowest point of the test right here. So you can see I set my stop loss below the lowest point of that candle right here. And as for the profit target, many traders will set their profit just below the previous swing high. So you can see that we have a previous swing high right here, and this is a common level for selling pressures to come in. It's very common that we see, you know, traders taking profits and traders trying to short at the previous high. So a common way to set your target is to set it slightly below this potential resistance level, right? Another method you can set targets is to have a risk to reward ratio, and a common risk to reward ratio is to set the profit 2 to 1. So you have this green area right here be 2 times as long as the stop loss area. This is what we call a 2 to 1 risk to reward ratio. But depending on your trading style, you can use different profit targets. And as you can see, in this case, the trade played out beautifully and we locked in some nice profit. Let's do one more example. So we use our next example, anchor from the swing low to swing high. And in this case, you can actually see something very interesting. And that is that if we look at the previous high right here, we can see that this one was previous resistance, right? And now we can actually see that this previous resistance flipped to become support. And this is a very common principle in technical analysis. You can see we had resistance right here. The price broke resistance. We actually tested previous resistance as support right here. And then the price went down and we got yet another test as support. So now we have 2 levels. We have the golden zone. We know that this zone is a support level, and we're looking for a third variable. And once again, we can use Japanese candlestick patterns. You can see that this red candle right here is actually what we call a bullish hammer. Even though it's a red candle, it's a bullish hammer, and we can use this one as our entry signal. So we open up our long position right here. We enter at the candle close of the candle. We set our stop loss below the lowest point of that candle. And as for our profit target, you can either have a very conservative target of a 2 to 1 risk to reward ratio in this case, or you can set your target just below the potential resistance all the way up there. So hopefully now, after watching this video, you have learned about Fibonacci retracements, but you also know that it's very important to combine the Fibonacci retracements with other technical variables, and support and resistance is one of the most important concepts to learn. So I highly recommend you guys to watch this video about support and resistance next.